Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be discussing the Bank of England's upcoming meeting and the potential reaction in the pound. So Rafi, we're not expecting any policy changes by the Bank of England on Thursday, but the bank will present the findings of its long-awaited study regarding the impact of negative rates on the banking sector. In addition, we'll get the bank's latest economic projections. Is there much of an appetite at the moment for the bank to take rates into negative territory?
Well, Maria, interestingly, appetite for negative rates does appear to have waned since that study was first announced. Of course, the negative rates was always, in a way, going to be a last resort policy, but there doesn't seem to be much of a consensus within the Monetary Policy Committee to take rates to negative territory, at least not just yet. And especially now that we've got a mass vaccination program underway in the UK. And so it is hoped that once the vaccination reaches a certain level of the population, then there's going to be a significant drop in the infection rate and in the death rate, and that's going to open the way for full reopening of the UK economy. And also, we don't know whether or not the Bank of England will be required even to ease policy further. And if they were to ease policy further, their number one option would be quantitative easing to increase their asset purchases. Apart, of course, from those findings on whether or not negative rates would be feasible in the UK, the updated forecast will also be important to watch, because if the bank is fairly optimistic about growth in the second half of the year and for 2022, then that's going to signal that we're unlikely to get more easing. But having said all that, even if negative rates won't become necessary, the bank will not want to rule it out. So most likely the bank will actually embrace that tool because it will want to have that tool just in case.
Okay, so what kind of a reaction can we expect from the pound if the Bank of England were to give the green light to negative rates?
So if they do keep that option open, but at the same time they signal to the markets that it's unlikely to happen anytime soon, then most likely the pound we might see a small rally in the pound once there's more clarity on that front, because of course even though it's becoming less and less likely that there's going to be negative rates in the UK. If you have a look at futures markets, there's still some negative interest rates priced into the market still. So once those negative rates were to be priced out, if the bank was to signal they're not going to go there anytime soon, that would definitely be positive for sterling. But at the same time, if they don't completely rule it out, if they say that yes, negative rates can work in the UK, we may need to use them at some point, then that will definitely curtail significant advances in the pound, and that would work in favor of the Bank of England, because it would keeping the pound's gains in check would be good for the economy, and it will also keep borrowing costs down and make it easier for the government to borrow at a cheaper rate.
Rafi, thanks so much, and thanks for joining us at xm.com.